Now, moving on to other markets in West Africa, starting with the BRVM. The BRVM 10 index closed trading at 248 points yesterday, was down 1.5%, while the BRVM composite lost 1.28% to close at 219 points. Total value traded on that market was low, given the recent trend we've seen, at 293 million CFA francs. The currency in the region is trading at 503 CFA to the US dollar, putting its year-to-date change at minus 0.85%. And moving on to the Nigerian market, of course, that market we're seeing in the market in Nigeria gaining momentum. The uptrend is significant these days. Yesterday we saw the NSE All Share Index up 2.5%, closing at 39,453 points. That's a 4.5-year high for the index. It was lifted yesterday by Dangote Cement ahead of Total, CAP, Flour Mills, and Okumu Oil. Meanwhile, we saw Nestle lead the losers, with other laggards including Guinness Nigeria, Portland Paints, Lafarge Wapco, and University Press. Let's now cross to Diamond Bank, where Adegboyega Adebajo, head of structured finance and advisory, is standing by to talk us through the market's trend. Thank you so much, Boyega, for joining us. Like I did mention earlier, it seems this uptrend has gained fresh momentum. It was up 1.75% the day before. Yesterday was up 2.5%. So clearly there are some people that think there's still value in this market. We see, of course, that a lot of it is led by the consumer and cement stocks. Your thoughts about the sustainability, though, of this trend? Because a lot of people have pointed out that those sectors are looking fairly richly priced right now.
Well, I wouldn't yet say they are richly priced. If you go through the details of the stocks, you'll find that much as we can talk about a 40% year-to-date increase, we still have some stocks that are not doing so well. You will realize that earlier on, the proportion of ordinary shares that PFAs could hold in their portfolios was increased. Much of the funding we're seeing in the market now is coming from the PFAs, and that demand is pouring itself more into the financial services sector and then into the consumer goods sector. The good thing about these funds is they're long-term stable funds, and I expect that they will stay in the market a while.
But I think a lot of people will agree with you that there is value in the banking sector. But if you look at the likes of Nestle, Guinness, Nigerian breweries, a lot of people saying these stocks are pretty richly priced. A lot of them trading at well over 20 times earnings, some even 30 times earnings.
Well, you know, one thing has to be said for those companies, and that's in terms of the kind of management and the kind of strategic planning those companies tend to display. The reason we probably find that the demand for the financial services now is that banks are clearly institutions that thinking in terms of their strategic projections, in terms of where the industry is going and how they're going to respond. Competition is pretty much intense, and so it brings out the best of that sector on a day-to-day basis. Now, that's what we see with the Nestle's and the likes you have mentioned. So clearly the stocks that aren't attracting too much attention are those where the perception is that the management may not be able to adequately respond to economic challenges.
Yeah, I've heard some analysts call that a quality premium for some of those names. But let's move on to other things going on in Nigeria these days. Of course, the big news this week has been the kickoff of the roadshow to sell the 10 power assets held by the Niger Delta Power Holding Company. And I want to get your thoughts on the appetite, especially from foreign investors for these assets. In the first round of sales, I think it was really driven by the locals. There was some partnership with some foreigners. But do you think that we would see maybe a greater appetite from foreign investors this time around?
Well, I really wouldn't use the word greater. Definitely an appetite, because the power sector, well, you want to think about it. In the telecom sector, there wasn't too much of a play for a wide array of foreign investors. In the oil and gas sector, which is energy too, foreign investors have played a significant role over a period of time. And with power, we see that this is something where there is a lot of potential demand already existing. You look at the kind of population we have and the possible demands for power, and you know that there's something to be going for there. The last round of the power reform is what we're just seeing with the Niger Delta holding companies. With the amount of funding or commitments that local banks have put into the earlier parts of the reform, I think it's a time for the foreign companies to come to look in. But then one says that with some caution, because if the structure isn't right, the structure of the entire power sector, that is, from generation to transmission and to distribution, then you wouldn't find much of a play just sitting in the GenCos. Much as PPAs can be signed, we still need to be sure that there's revenue assurance coming from the distribution side.
Right. So even if we don't see any significant equity interest from foreign investors, one gets the sense that we certainly need funding from foreign investors, because given what we saw in the first round of sales, the capacity of the local financial institutions to support these transactions, I think, will be really tested this time around.
Yeah, well, it's one thing to talk about capacity, it's another thing to talk about the risk perception and what proportion of each bank's balance sheet is going to go into that sector. As you well know, it's part of pretty good management to have sector limits by which you would participate in whatever sector that's coming on. And you may just want to think about it as a new game to play. Because for the first time, power is going to go into the private sector, and the foreign companies are also going to come here to manage it. There may be experience in managing plants in other parts of the world, but as you and I know, Nigeria tends to throw up its own unique challenges. So even if you've got the best foreign companies managing those plants, you want to see in terms of how they respond to local challenges that may come up. So there is a risk perception for that sector, and I think local banks themselves would want to limit the degree of debts which plays in there.
All right. Okay, let's take it back to the market. A quick outlook from you. Where do you see this market heading? It's up almost 40% year to date.
Yeah, 40% yesterday, slightly over 90% on a 365-day trend. I still feel it's going to go up because of the stability of the funds that are out there. We're nowhere near where we were some 5 years ago, even though we're talking about a 4.5-year high, you know, but then we should do that with some caution. Yes, there are still some penny stocks, some interesting stocks to pick, some sectors that are still with a lot of latent potential there that can grow. But we need to be mindful by the rate at which some particular stocks are growing. There should be no sentiments here, because if the play by portfolio managers is on sentiment and names, then we can probably see some adjustments before the end of the year.